Traders, welcome back to another price action trading lesson. Today's session presented a trend range structure because we have flat 21 bar EMA, we have consistent price swings up and up and out through the EMA, and I have to follow short-term trend line rule since the structure is a trend range. This downtrend has a break, move to a new extreme. We're bouncing off to these lows. I'm pausing looking to go short because downtrend played out with the break in extreme. Prices are breaking above the EMA. And right now what I'm going to do, I'm going to redraw a brand new uptrend. We have a spike up, market geometry indicating a spike and a channel pattern because downtrend played out, okay? And we're bouncing off the lows in the structure's trend range. It makes sense to expect bearish depletion and right now focus on this short-term bullish uptrend. That's how we navigate trend range. You have a new low, first entry short, there's one tick break lower, reversal, second entry short failure, but I cannot take failed second entry short this far from the EMA. So you can see this setup right here visually looks like a failed second entry short. They corrected to the EMA as you would want it to see. And also this is a new high, first entry long, pullback, second entry long. Okay, so you have second entry long and a failed second entry short. This uptrend is new high, downtrend played out, and this is first great high probability setup because you can combine the second entry long to like a pullback aspect with a failed second entry short continuation. We have micro double top count reset. We can't really take high low. We already have double top, horrible signal bar, and we create a break and move to a new extreme. So we have one leg up. I'm going to measure it. Second leg, perfect measure move. Market likes to move in pairs of twos. Prices are breaking below EMA. Now we have what is a failed second entry long, new high, first entry long, pullback, break below EMA is indicating bearish reversal. I was thinking there can be some wider channel, but because we broke below EMA, that is negating the wider channel. Price action is telling me that there's such a massive spike below EMA means short-term channel played out, and we're right now trending lower. So this right here is a failed second entry long. Problem is, the first signal bar is this one right here, which is not horrible, but the bullish body is not ideal, followed by this bar, which is a little bit better, but it is still at the bottom. If you sold here a failed second entry long, I can see why. Just that the signal bar is not ideal, but context-wise, it makes sense. At first, I drew my trend line a little bit wider. First entry short, but once prices are breaking above EMA, prices are really swinging up and down. Structure is too rangy. There is no setup. Can redraw short-term uptrend working higher. Something like this. So I'm just trying to follow short-term trend line rule. That's pretty much my best bet since I'm navigating in trend range. This is how I can use price action to help me predict where the market's gonna go. We have a second entry long, but there's a massive gap between the EMA. I cannot go long this far from the EMA. There can be double trap. Of course, high low even further from the EMA. There is no entry for me. So even though we should get new high tested, I cannot go long. Almost new high tested, but prices reverse all the way back down. So this right here is considered as a breaking new high. Massive retracement. There is a lower high, but it's not the EMA horrible bar. We can't really take it. Once you get a failed second entry long, it's simply too far from the EMA. The move already happened. What I can do is I can draw bigger downtrend. Why? Well, because the entire push down is getting a little bit stronger than for me to just draw this tiny little uptrend, downtrend for the first leg. So I'm going to draw a wider downtrend. Okay. I have to respect the short-term correction. So right now we expect new low to be tested. First entry short, pullback. There is no second entry short, there is no break. Then there is a second entry short, but problem is 1, 2, 3, 4, 5 bars stacked right next to each other. Uptrend doesn't have new high, and EMA is exactly in all these bars. So this is not a good trade to consider because you can see how these bars are stacked right next to each other. And uptrend, you can see massive spike above EMA, the first leg. So there can be second leg up. So because there's a congestion, we can't really take it. EMA in all these bars. This uptrend can get a new high. Break new high. A little bit tricky area, but hopefully it makes sense why you want to be patient. Uptrend played out. One leg up. Break. Second leg up. Prices are breaking below EMA. Uptrend played out to like a pullback. Massive push below EMA is indicating right now, okay, sellers want to see the new low tested, following the trend line rule. This is a lower high, but it's not really at the EMA, you know, matching highs. It's still a lower high. It would have been better had it take one tick higher. Context wise makes sense. It's a little bit harder setup to enter. You know, more aggressive trader can consider. By the time I'm gonna fail second entry long is so far from the EMA, not ideal. I'm gonna mark it more aggressive. This is not a bad setup. I can't take the failed second entry long, even though it worked. It's simply a horrible bar, far from the EMA. Downtrend played out with the break, move to new extreme. So I have to pause looking to sell because this downtrend has a break new low. This is a rangy market. Now, can I go long? Well, as you can see, why prices are not reaching the top resistance. This is what I always ask myself while I'm trading a trend range. So there's definitely some bearish imbalance. I can zoom out even more. You can see the initial high is right here. So definitely it doesn't look like a healthy trend range. We keep working over. The bearish bias is too strong. So for this reason, I don't really want to think about buying just yet. It can work, but we need to see the push above EMA in reverse if you're thinking about buying, which is right here. New low, first entry short, failure, second entry short, failure. One tick lower, trapping all the sellers when the downtrend played out. While it's pushing above EMA off the range lows, can indicate that these sellers are going to get trapped. It's closing a little bit too far on its high. It's at the very top of the move, so you don't have that much room to ride out any pullback. Okay, failed second entry short. But it's a decent setup because downtrend played out. It's above EMA. It is a reversal pattern of the range lows, and it is safer than to be buying low given the imbalance. I'll probably use deep limit order. It still worked. So far from the EMA second entry, we can't take breaking new high. So now I was expecting prices to have some decent reversal if the range is going to kick in. But notice what happened. Massive sell-off to the downside. So now I have to really ask myself, hold on. After breaking low, we would expect, this is a healthy trend range, for prices to go all the way to the top. Okay? For buyers to have some shot to have a reversal. This didn't happen. They got slapped and prices reversed all the way down here. So once we see this, after breaking low, I'm pausing looking to go long because there's too much of a bearish bias. At the same time though, I can't really sell this far down because this is a very weak variation of the downtrend because the pullbacks are very strong. It basically looks like a trend range slightly tilted down. And once we are trading this, we want to sell high, not at the bottom. You can see you have push up, second, third. This support is acting as a resistance. So, you know, it is tempting, but you're selling at a very low. And this is still quite rangy. We can't really take it, even though it worked. And at this point, we are safe to be looking for some wider downtrend because 3 swing confirmation right here. We keep breaking lower. The range is getting ignored again. This is important area because the resistance held 3 times. Buyers failed at the reversal. New low, first entry short, second entry short. So far from the EMA inside bar. Now you have a lower high, but notice once again, a little bit closer to these lows to my liking and enough with the EMA. It is a lower high confirming second entry short. It is at the key entry point, but it's just more aggressive. New low, first entry short. Can reset. New low, first entry short again. Now, as I mentioned, this is weak variation of downtrend. And this is not a strong downtrend from the beginning of the session. No, in fact, we were in a trend range and now we broke lower. So we definitely expect stronger pullback now simply because this is not typical healthy downtrend. We started from a trend range. So it can take a little bit of a while for downtrend to get established. So for this reason, I'm not going to sell this, even though it is a first entry short, second entry short. It worked for a scalp, so it ended up working. But because prices are bottoming out, you can see how prices are struggling to break lower. Little series of high lows. We pushed above EMA, it still worked for a scalp. But I gotta be careful because this is weak. We can have stronger pullback. Prices are correcting. So now, as you can see, we have some small resistance. We're very close to confirming the trend line. First entry long, break below EMA. So it's going through my mind. This is right now resumption of the bearish push phase because the correction phase ended. And I want to see second entry long, failure. New high, first entry long, second entry long, failure. Can you get it? No, market continues to just drop lower. Okay, brand new push phase established. I was looking for second entry short at the EMA. So at first I drew my trend line tight like this. Now that we are breaking higher, I have to redraw a little bit wider channel because why are we breaking above EMA? And also this break is super tiny. It looks like a visual one move, so we can't really right now ignore. You can see how nice it fits. We're breaking above EMA, so I gotta be careful. I need to see some push below EMA if I want to sell. This is an inside bar, so you cannot sell anyway. And prices are now completely reversing all the way up. So what I have to do now is, you can see, complete reversal to the upside. So what I'm going to do, I'm going to zoom out. And in a situation like this, when I'm confused, if I'm supposed to be looking for a new low of this downtrend or not, I'm going to use the Fibonacci tool, select the top to the bottom. If the retracement is over 50 to 60% right here, this means you're leaning more towards uptrend being the main pattern and you're forgetting about new low. In this case, massive reversal, deep retracement, no problem. I expect right now this downtrend to not get new extreme. This uptrend is the new pattern. Initially, I had my trend line a little bit tight like this with small break and new high, but because we have a break and new high without even touching the EMA, you can see, if you zoom out, does this even resemble uptrend having a strong break? It doesn't. It's so insignificant. So what I'm going to do, I'm going to widen it just a little bit. It still keeps the structure intact. And this overall was such a strong uptrend, which means the bulls, they want to see clear, legitimate break and new high. This was so insignificant. So this uptrend right now is the pattern. The whole time we were looking for second entry long into EMA. That didn't form. So no really good setup here. Downtrend is working lower. Okay. EMA is flattening, so I can see we are also entering some small trend range. But the bias is bullish. We expect new high to be tested. New low, first entry short, pullback, second entry short failure. And also new high, first entry long, pullback, second entry long. This is the setup we are expecting because we're back above EMA. Second entry long, fell second entry short, and we need to get new high. This was quite a strong uptrend, and we're bouncing off the range lows. It formed inside bar, so I didn't take it, but there is a chance to take a double bar entry, waiting for this bar to finish. Chop a limit order, it worked nicely. You need to get new high. This is nice setup. Two high probability setups in one. Okay, I'm gonna redraw the downtrend. I cannot go long now because you're very close to these highs. There's a brand new downtrend. There can be the leg down, break, new extreme. Okay, the downtrend played out with the break, new low, one bounce, second bounce, third bounce, triple test, off the lows of the trend range. You trade it up into this. So the consolidation you trade up into, you expect prices to continue working higher. We need to get new high according to trendline rule. And because market moves in pairs of twos, we have one leg down, second leg down. This is great. Signal bar, a little bit big, 3.75. So you may use limit order. I use a little bit deeper limit order, but great signal bar, triple test off the bottom, downtrend played out. Very close to creating new high, but not really. So we're still expecting new high. We're drawing the downtrend again, just like here. What do you think? Can we take high low? No. Just like here, there's a downtrend in play. It broke below EMA, so there can be stronger pullback. You prefer to be buying at these lows. Prices eventually ended up making a break and new high. Perfect price action. Okay. So you can see, as traders, we need to navigate the candles by looking for these channels. So right now, uptrend played out. We can have correction or reversal. You want to see push below EMA to confirm reversal, which is happening. Can I get a reversal pattern? And we cannot. No failed second entry long. Gonna redraw the short-term downtrend. So this downtrend right now is the new pattern, okay? It is significant push down on its own. Uptrend played away to break new high. Range lows were completely ignored. In fact, you can see breakout, pullback. If this is going to act as a resistance and you're going to push below EMA, you're going to combine this scenario with the fact that this downtrend is new low. So because it is a simple big trend range there, you're just following the short-term trend line rule. So you're able to predict where the market is going to go without any stochastic, Wyckoff, RSI. Now that's just pure price action. Going to redraw the uptrend working higher. Can draw a little bit tighter if you want, cut the corner. Going to draw a little bit wider. So I don't really want to sell just yet. New low, first entry short, second entry short, lower high. Lower high is still inside the channel, a little bit too steep. We can't sell, but this is better. New high, first entry long, pullback, second entry long failure. Right below EMA, great signal bar, resistance is holding. Downtrend needs to get new extreme. That's the bigger pattern. This is a great felt second entry long. High probability setup. Felt second entry long. Prices are pushing below EMA, and now we have great entry again. It is a lower high confirming this felt second entry long, correction continuation. So this right here is a lower high, great signal bar. You can see how the EMA keeps projecting. This is clear sign right now that the bulls are going to get trapped. Market wants to see the new low tested. Double bar entry not the cleanest. You have micro double bottom, so can't reset, only first entry short. Had there been some nice second entry short you can consider, you still need to get the new low, but this is ugly. Break, new low, so downtrend played out. Okay. Now we can see that after breaking extreme, EMA keeps projecting every single time, and it looks like there's a brand new channel established again. Okay, because it looks like a spike and a channel pattern. But you gotta be careful because the main one played out. So this is secondary supportive channel. So I really want to see it confirmed. But you can see how EMA keeps projecting. There's a market geometry. No entry here. You get a second entry short, but you have 1, 2, 3, 4, 5, 6, 7, 8, 9 bars stacked. You know, this is way too many bars stacked right next to each other. This uptrend, the spike up doesn't have new high. Possible overshoot. You know, what if we're gonna trap everyone here, go higher, then go lower? So a little bit careful, but this downtrend is getting confirmed. Second entry short, of course, I cannot take this big, this too far down right into these lows. Market is correcting. We expect new low to be tested. Break. New extreme. Of course, I cannot sell right into new low. So this is just navigating the price action. Break new low. Market is reversing to the upside. Okay, so what's going through your mind? Downtrend played out with the break new low. It's getting sideways, which is good, indicating bear depletion. Push above EMA right now is indicating bullish reversal. Breaking the channel. This uptrend is new high. Okay, downtrend played out. Break new low. Uptrend, break, you expect new high. So you want to see second entry long at the EMA. First entry long. You have a second entry long here, but it's a doji below EMA. Not ideal, okay? Not ideal. So once I see bad doji below EMA as a second entry long, I want to see push above EMA and a confirmation setup. And now you have high-low confirmation setup. This one was a little bit tricky because at first I thought this is just an inside bar to this bar right here. But I noticed there's a one tick break lower, reversal up, so there's technically first entry short failure. So this right here is a high-low confirmation setup, and this is great setup. I took this setup. Great high-low, confirming the second entry long, confirming the fact that this uptrend is new high. It's above EMA, great signal bar. You can see the momentum. It looked bearish, reverse up. Great setup. No new high yet. You know, now you have another mini second entry long, which is not that bad. EMA keeps providing support. You can see EMA holding, new high for central second entry long, uptrend new high. You can consider taking as well. A little bit too late, breaking new high, and market is about to close. After new high, market reverse all the way down, trendline rule. So this is the overall structure for today. Overall, you can see big trend range, a lot of price action swinging up and down. Following the trendline rule will help you predict where the market's gonna go. The first part of the day was a little bit boring, quite choppy, not that many easy textbook setups. This one was really great, the great second entry long here, but the second part offered a lot of opportunities. I hope you find the video helpful, educational. I'm gonna talk to you next time. Good luck in your trading.